Let's go to market watchers, Paul Dietrich. We've also got Mark Matson. We're going to rifle through some of these. What's interesting, Mark, as I end with you, the Apple spillover is remarkable. We're going to go into more detail on this, but it is affecting almost anything and everything in its sphere, including a lot of the suppliers like SJ Microelectronics and Lumenton. We've got AMD, NVIDIA, Skyworks among the chip stocks feeling it. Is this justified in your eyes?
Well, this is a cautionary tale for investors. One of my messages to investors is don't get caught stock picking. For many, many years, as you know, Apple was the golden boy of stocks, and anything can happen. The future is unknowable. What I want investors to focus on is the next 10 years, and that means you got to own equities and look at market crashes or market drops like we've experienced. The S&P's down about 14% since the high 3 months ago. You got to look at that as an opportunity to buy when it's low, rebalance with high-quality fixed income. Opportunity,
let me ask you about Apple then. Is it low enough now where you would say, all right, that's a little overdone, falling close to 40% from the highs, is a little overdone? Or no, you think it has a ways to go?
Well, look, I can't predict Apple, but what I know about stocks in general is that stocks that have a high book-to-market value, meaning a lot of assets to a small price, have higher expected earnings. And as Apple gets more depressed, it actually becomes a higher expected return long-term. So I can't predict Apple specifically, but what I can tell you is if you buy distressed stocks long-term, you end up adding about 3 to 4% to your portfolio.
Well, I don't know what's leading what here, and much of the conversation has centered on China. I was kidding with Charles Payne a couple of minutes ago about the ISM number. What was a little bit unnerving about that is this slowdown that was perceived to be Asia-centric and to a lesser degree what's going on in Europe now might be on our shores. And you don't want to over-extrapolate too much from one number because, for example, the private payroll surge was unexpected. That's very strong. Retail sales, by and large, pretty strong. But are you worried that whatever started in China isn't ending in China?
I don't think people should be concerned about China, and here's why. Look, it shouldn't be a surprise to people that communist countries can have economic problems. But markets have, not only survived trade wars, they've survived real wars. So look, since the low in March of 2008, the market's up, S&P's up 385%. Markets are volatile. Take a deep breath and be calm and buy them while they're low and plan for the next 10 years.
Paul, what do you think of that?
I agree 100%. Right now, if you look and put everything in context with Apple, this has been an enormous overreaction. The market's price is down 40%, as you mentioned, and yet what's happening in China is only going to affect about 5% of total Apple revenues. How can you have a reaction of 40%? And if you look at what's happening in the short term, I do believe that Apple will have kind of slower sales in 2019, but not for the reasons that everyone's talking about. It's because 5G is going to be coming into effect around big cities in the United States, and nobody wants to pay $1,000 for an Apple iPhone right before they're going to get the biggest upgrade of our lifetimes. And I can tell you, I've seen 5G in South Korea. It is a record breaker. I mean, it's a game changer. And what's going to happen between 2020 and 2021 is that everybody in the world is going to be upgrading their iPhones to 5G capabilities. That's going to be the biggest sales and revenue driver in the history of Apple. And when you can buy it right now for less than 10 times forward PEs, this is an unbelievable opportunity.
Gentlemen, I want to thank you both. We'll watch it very closely. I do want to switch.